Well, it's certainly been a bumpy ride in the market for the last few weeks and this week and last week in particular. And one of the cute little phrases that I've seen in a number of headlines is that investors are tariff-eyed, and certainly an apt description given the concern about the impact that tariffs are going to have on the markets going forward. Hi, my name is Jamie French with Advent Partners, and I thought of sharing with you some of our thoughts about how these tariffs are going to impact the markets going forward. But the reality is, we don't really know how these tariffs are going to play out, and we don't really know what the impact is going to be on the market once they do. Right now, it's creating a lot of uncertainty, and uncertainty typically leads to volatility, and that's why we're experiencing what we are. That being said, I wanted to give you today 5 practical reminders as you try to navigate markets like what we're experiencing right now. And the first of those reminders is that this volatility is not unexpected. Based on the valuation of the market, really over the last couple of years, the market has been somewhat rich. And so we've been expecting some volatility, and we're now starting to see that. It might be a little bit more pronounced than what any of us had hoped for. But really, this is not unexpected to see the market pull back. The second reminder is it's not really abnormal either. If you look since 1980, the S&P 500 on average within the year has dropped about 14%. And we're slightly above that year to date, and it certainly happened very rapidly. But in terms of how far it has dropped relative to historical averages, we're really in the range of a fairly normal year. By contrast, in 24 and 23, the worst drop within the year was 10% and 8%. So really, we got a little spoiled in the last couple of years, having really strong market returns with really low volatility compared to historical averages. And that kind of leads into the third reminder, and that is this: don't forget history. 5 out of the last 6 years have been really strong years in the market, 2022 being the exception. And so when we have periods like this where the market is pulling back, we tend to feel that more acutely. But if we look at the big picture, if you were a disciplined investor over the last 5 years, you've done really quite well, even with the recent pullback. The fourth reminder is though recession risk may be elevated depending on the outcome of these tariffs, other indicators that the National Bureau of Economic Research looks at in terms of determining whether we're in recession still look fairly strong. Things like industrial production, non-farm payroll, retail sales, and real personal income. All of those are indicators that still look okay today. And so that's the fourth reminder. And then the last reminder is a more practical and simple reminder, and that is simply to separate your politics from your investment decision making. In times like this, it can be tempting to make decisions based on what you feel like is going on in the political arena, and that's a surefire way often to make poor investment decisions. So as much as possible, try to separate those, and certainly call us if you need help talking through that. And that brings me to, what can you do? I've given you the 5 reminders. What can you do? Well, a couple things I'll share. The first is what I just mentioned is call us. Investors often worry or wonder, is this a time to be making a change? There's typically 2 things that we're looking for in terms of making any significant shifts in a portfolio, beyond just the standard tactical changes that we might make or rebalancing or looking at tax losses, things like that. But the 2 things that we would look at would be, number one, if the money that you're going to need is short term and it's invested in the market, that's probably something that you should revisit. And the second is if the ride has just gotten a little too turbulent and you can't stomach it, that would be another reason to have a conversation about whether we should shift some things around or reduce the risk of the portfolio so that you can feel better about that. So that's the first thing, is call us. Secondly, attend our economic update event coming up on May 7th. Once a quarter, we do a deeper dive into what's going on in the markets, in the economy. You can register for that on our website at www.adventpartnersfp.com under our education center. And we'd love to see you there, and that might help get a little bit of the bigger picture. So as I said, it's been bumpy, so hang in there. If you're feeling stressed, remember to breathe, to exercise, to do things to help reduce your stress, and certainly give us a call if we can help. Thanks for listening today.